Hi, everyone. Welcome to the preview session of our Trade Small Win Often, the Dick Diamond method of trading for a living. Right now, we're starting to get questions about the new course installment, so I'm hoping to answer some of them today. So let's dive right in. So quickly, who was Dick Diamond and what is his 80-20 trading method all about? If you have watched these videos that tell Diamond's story, this is on our website, then you already know that Diamond was a professional day trader. EWI's founder Bob Prechter and Diamond met back in the 70s in New York on the trading floor and became friends. That's our connection to Diamond. Right here is a video where Bob talks about meeting Diamond for the first time and what impressed him so much about the way that Diamond traded. Diamond began trading during the 1960s bull market. He had some early success, but when the bull market had ended, he lost most of his capital. At that point, he completely changed his trading approach, and over the many years that followed, developed a personal trading philosophy based on a set of fairly common market indicators and many strict rules, the philosophy that he eventually called the 80-20 method. He called it that because he said it gave him about an 80% chance of winning on each trade. When Diamond passed away in 2015, we decided to keep his legacy going, and our course teaches the 80-20 method in full detail. Of course, it's still Diamond's method. It's not my method or my former colleague, head of education, Wayne Gorman's method. His videos comprise module 3 of the course. It is and always will be Diamond's approach. And the first thing to know about it is that it's not just a bag of market indicators. The backbone of the method are not the indicators. It's a change in mindset, a disruption of how most people view and trade the markets. Let me show you what I mean. At its core, Diamond's method is simple. That's one of its many advantages. To make his trading decisions, Diamond did not watch the news or earnings or perform lengthy calculations like some options traders do or count Elliott waves. None of that. All he did was look at one of his indicator templates, like this one that you see right now on your screen, and he would wait for the indicators to line up in the same direction. Then he would jump in, get a point or two if the market went in his direction, which of course wasn't always the case, and then he would quickly close the trade. He wasn't trying to get a lot of points. That's part of the method. For Diamond, the key was to get in and out of the market quickly while the indicators were still lined up in his favor to minimize his time in the market and thus reduce the risk. All students of the course get a free 90-day trial of the market data platform we use in-house called Trade Navigator. This is it right here. The Trade Navigator team pre-programmed 6 of Diamond's indicated templates. So the students of the course don't need to program anything themselves. The market you see here right now is S&P E-mini futures, Diamond's favorite market. This is live real market data. This is a 2-minute chart. That's Diamond's favorite time frame. We are saving the names and the settings of the indicators for the students of the course, but you can see that it's fairly simple. There is a set of indicators at the top of the screen overlaid on the price, plus another indicator at the bottom of the chart. These are momentum indicators, most of them common ones, something that is available on most trading platforms. And besides this template, you also have 5 other templates with similar set of indicators. And Diamond would use sometimes all of them, sometimes just 1 or 2 templates. we'll get into more detail in the course. But again, the core of the 80-20 method are not so much the indicator as it is patience, the patience to wait for the perfect setup, and discipline, the discipline to stick to the rules of the method. Diamond used to say about himself that he was like a cat in the bushes, sitting and waiting until the indicators position themselves just right to indicate an 80-20 setup. 2 or 3 trades per day, that was all that he looked for. When he saw an 80-20, he would jump in, quickly add his stop loss, a very tight stop. In the course, we show virtual trades with stops as small as 2 points. And then just as quickly, he would close the trade. And if the market didn't immediately go in his direction, he would close the trade at break even or at a small loss without waiting for his stop loss to be triggered. Then he would wait for another setup. Most of his trades lasted only a few minutes, sometimes only seconds. He never tried to catch every tick. In fact, he warned students over and over again against being greedy, and he specifically told them to leave money on the table. In his words, he said, "Go ahead and sell too soon. Guys who sell too soon constantly make a terrific living. Sell into the heat." See, most traders do the opposite. They try to stay in the market as long as possible. Also, before they even get in, most traders have a price target for their exit. Diamond didn't have price targets. He simply said, sell into the heat. By jumping in and out of the trades quickly, he lessened the risk of the market moving against him. This is one of the risk management aspects of the 80-20 method. Diamond absolutely hated risk and tried to minimize it at every turn. Some days he wouldn't trade at all, maybe on an emotional day like today, for example, when there's a lot of news and volatility. And he also told students that leaving a potential trade alone is always a good idea because your capital is still intact. Again, most traders do the opposite. They rush into a trade because they're afraid to miss out. Diamond never chased against every potential trade, especially if something didn't feel right. He knew that trading opportunities are like buses. If you miss one, here comes another one. So 98% of the time, he was not in the market. And on those few moments when he was, he would jump in and out very fast. And he never kept a position overnight, again, to minimize risk to his capital. So you can see already that the way Diamond approached the market was very different than how most traders do it. That's what the upcoming course is about, to show students the 80-20 method in detail, to answer questions, and to help students understand how Diamond was able to make his living in the markets for several decades when many traders don't last even a year. I hope that this quick overview answered some of your questions, and if not, please use the chat box on the right side of your screen to send in your question. And if we don't get to it during the webinar, we'll email you a reply later. In the meantime, let me answer some of the frequently asked questions. Question: can I use the 80-20 method on markets other than the S&P mini futures? This question often comes from Forex traders and lately also from Bitcoin and crypto traders. Diamond preferred S&P mini futures for their liquidity, tight spreads, and ease of access. In the course, he does briefly touch on trading individual stocks and options. However, the bulk of the course material, his lessons, past market examples, as well as Wayne Gorman's and my virtual trade videos, all those focus specifically on S&P mini futures. Diamond's indicators may or may not apply to other markets. It may be worth experimenting with, but Diamond's trading rules and principles, his 80-20 philosophy, as shown in the course, is universally applicable across all markets. Question: how did Diamond get away with his unusually tight stops? Yes, as I mentioned in the course, we show virtual trades with stops as small as 2 points. When we first were putting this course together 4 or 5 years ago, Bob Proctor told me that when he first met Diamond in 1979, I think, he also couldn't believe how tight his stops were. What allowed Diamond to have tight stops was the fact that he was extremely selective with his trades. Instead of opening and closing 30 or 40 or 50 trades a day, like many day traders do, he sat and he waited only for those 2 or 3 trades per day that gave him that 80% chance of winning, and only then did he act. And not every trade worked out, of course, but for Diamond, being super selective and patient also meant the benefit of having very tight risk control. Question: how long before I can confidently trade using Diamond's method? That depends on the person. There's an old saying, a minute to learn, a lifetime to master. The markets are always challenging. Every day they do something surprising, something different, and we cannot count on today being like yesterday. If you think of Diamond's course as a driver's education class, for example, ask yourself, how long after you got your driver's license before you could call yourself a good driver? For some people, it might take a few weeks or a few months. For others, it might take years. For some, never. The only way to know which group we might fall into is to get behind the wheel, so to speak. Question: what's the minimum amount of capital needed to trade for a living? That depends on how a person defines a living. It depends on where you live, for example. The answer probably starts by understanding capital margin requirements for S&P futures. It's a good question to ask a broker. How much capital is needed to day trade E-minis? It's also a question of how many S&P contracts someone trades at one time. Diamond traded anywhere between 1 and 10 S&P E-minis at a time. He called 10 contracts his core position, the maximum number of contracts that allowed him to keep his emotions in check. Diamond told students to develop a core position of their own, smaller or larger than his. He left that up to the student. So how much capital a person might need to trade for a living depends on these and other individual factors. Keep in mind, though, that one benefit of the method is that Diamond went home flat at the end of each day. He never kept a position overnight. And that also impacts the trading capital aspect because the margin requirement for day trading is much lower than for overnight futures positions. Question: is it only applicable to day trading? Can it be applied to short or intermediate trading? Diamond was a day trader. He was not a swing trader. He was not a position trader. He was a day trader. He watched S&P E-minis intraday between 9:30 a.m. and 4 p.m. Eastern US time. That's during Wall Street's daytime trading hours. He did say that his indicators worked on time frames longer than 2 minutes, but he himself didn't go beyond that because he knew from years of experience that longer trades mean more risk, and more risk means more stress and more anxiety. And he tried to reduce his stress, reduce his anxiety while he was trading, not add to it. Diamond knew that stress leads to losing control over one's emotions, what he called emotional discipline, and that leads to expensive market mistakes. Markets are always full of uncertainty, but with short-term trades, he reduced that uncertainty down to a minimum. For Diamond, the safest way to trade was quickly in and quickly out. He told students grab a piece of the pie, and come back for more. So you see, for Diamond, his patient, disciplined, and risk focused 80/20 method was more than just a trading approach, it was a lifestyle. For many traders out there, trading is a white knuckle roller coaster ride. And for some traders, that's where the fun is. Not for Diamond. For him, trading was a job, a nine to five. He figured out a way how to work only a few hours a day, how to never bring work home, how to sleep well at night, and still, quote unquote, make a good living, as he says in the course. Okay, our time is almost up. Before we go, I'd like to share with you a quick virtual trade video that I recorded using Diamond's method a few days ago. You may have watched it already, but it's a fresh example and it shows you the method in action. So here it is. Hi, my name is Vadim Pokhlebkin. I am the host of the course Trade Small, Win Often, the Dick Diamond method of trading for a living. We are starting the sixth installment in March. And today I was hoping to record a quick video to demonstrate Diamond's 80/20 method in action. If you're considering getting a seat at the upcoming course, you are probably wondering if his method actually works. And as they say, the proof of the pudding is in the eating. So let's see if we can spot a virtual 80/20 opportunity and take advantage of it. In front of you, you see live market data. This is the S&P E-mini futures contract, Diamond's favorite market. This is the 15-minute time frame. Diamond preferred the 2-minute time frame to spot 80/20 setups. Today is February 16th. It's 9:45 a.m. US Eastern Time. The market has just opened. Currently, I don't see a confident 80/20 setup. So as we wait to see if one develops, let me tell you a few more things about the method. Diamond was a day trader. He looked for opportunities on the intraday basis. His method would deliver on average 2 to 3 80/20 setups per day. Diamond tried to minimize his time in the market. Instead of staying in for as long as possible, like a lot of traders do, he preferred to jump in and out of the market to grab a piece of the pie, as he called it, and come back for more. Leaving money on the table was one of the cornerstones of the method. Diamond also advocated for developing what he called a core position. How many contracts of the S&P mini futures could a person trade without getting too emotionally rattled? Diamond traded anywhere between 1 and 10 S&P E-mini futures contracts. He called 10 his core position. He would never go above 10 contracts. So what I'm going to do as I wait for a potential 80/20 setup to emerge is open up my virtual trade screen, preset it to 10, that's 10 contracts, and wait for a possible setup. The market's been dancing in one spot since the open, but right now it looks like we are setting up for a bearish opportunity. So I'm going to go ahead and sell this market for 10 virtual contracts. Looks like I got filled at 44.40 even. And now I'm going to close. Let's see how we did. On this particular virtual trade, the market delivered 2 3/4 of a virtual point. As you can see, the market's still continuing lower, but as I mentioned, Diamond's approach calls for quick and decisive in and out action. By the way, the software that I'm using is called Trade Navigator. All students of the course get 3 months of this software free. And after the course, students are free to keep this market data platform or to choose a platform of their own, because most of Diamond's indicators are fairly easy to replicate. On this chart right here, I'm not showing the names and the values of the indicators, but as you can see, it's all fairly simple. You have 3 lines overlaid on the price at the top of the screen, and then you have an oscillating indicator at the bottom. What I'm looking for is an alignment in these indicators. Now, 80/20 opportunities are called 80/20 for a reason. Not every opportunity, not every setup delivers. The core of Diamond's method is patience and discipline. It's sitting and waiting for just the perfect alignment in the indicators to suggest that immediate setup. We'll go in a lot more detail in the course, which starts on March 3rd. I hope you can join us. Thank you for watching. Welcome back. As we wrap up today's webinar, let's recap. Diamond's 80/20 method comes down to 3 things. First, over his 48-year career as a day trader, Diamond developed a set of market indicators that showed him when an 80/20 setup was likely. Second, he waited patiently for that 80/20 signal. And third, he had the discipline to stick to his own rules. That's what made the 80/20 method viable. It's simple, and it helps a trader maintain a high degree of control over each trade. The hardest aspect of the method is having enough discipline to stick to the rules and having enough patience to wait for only the right setups. The 80/20 method is not the holy grail of trading. Nothing is. But when we set out to offer this course, we wanted it to be more than just another trading system, because for Diamond himself, it was more than that. It was a lifestyle, as I mentioned earlier. He tried to reduce his risk and worries when he traded, and that helped him stay relaxed when he wasn't working. Well, our time is up. I hope you found today's webinar informative. During the course, we'll have 7 similar live review sessions, 1 hour long each. If you haven't explored the details of the course, you can do so on this page, elliottwave.com/wave/bigdiamond. Thank you for joining us today. Have a great rest of the day or evening, and happy trading.